the market has bid this up. But the reason why this is happening is because Grayscale has filed for this GBTC to become an ETF. And during that period, they can't create any more shares. So there's a shortage of shares. The market has bid it up. And so now it's trading at least 100% premium. So investors need to know that even if you bought this and Bitcoin doubled in the next year, you might not make any money by buying at this price.
So, Rebecca, if I'm an investor right now in Grayscale Bitcoin Trust, I would want to take my money out. Is that the right instinct?
Yes, absolutely. Yeah, I mean, I think blockchain is a fascinating technology, what underlies Bitcoin, and we're invested in a number of companies that will benefit from blockchain. But Bitcoin, to me, is a speculative instrument, and if I have a client looking at it, I'll say, okay, you put aside this play money. If you make 600, 700%, lovely. If you lose it all, that's okay too, because you don't have enough clarity. It's unregulated, it's not liquid. To me, I understand why it's up, but I wouldn't put it in a diversified portfolio. No way.
How about BK? Would you, once it does become an ETF, would you buy it? Because you get liquidity in a market, whereas, you know, liquidity for Bitcoin can be difficult. You want to go take your money out of a Bitcoin machine somewhere, it's difficult. What happens once the ETF comes on board? Does this thing fall in price because now it's going to be more liquid, or what?
Yeah, let's just assume that the price of Bitcoin is exactly where it is right now. That spread will compress as soon as they can issue more shares. So yes, this could fall in price even if Bitcoin doesn't go anywhere. You know, on the liquidity level, I would just say Bitcoin trades as much on a daily basis and sometimes more than the GLD ETF. So it's not an illiquid instrument, and there's plenty of easy ways to buy it. You know, in this particular case, it just shows how much demand there is out there. But investors have to know this is 100% premium to spot.
Once it is an ETF and is more likely to match the underlying asset, then do you buy it, or do you treat it like a closed-end fund? Whereas, you know, once it's trading at premium to NAV, you sell it, or once it's under the price of the underlying asset, you buy it.
So once it is an ETF, I think it's a great way to get exposure to Bitcoin in an IRA account or a typical brokerage account, as long as the premium isn't that high at all. So, you know, it's going to act just like the GLD once it is approved as an ETF.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.